Good morning. It is 13th of February, Tuesday 13th of February, also Pancake Day, so happy Pancake Day to everyone. Just going to have a quick look over the markets, how they finished last night. A couple of news stories. It is relatively quiet on the news front before then having a look into what we're expecting for the day ahead and in preparation really for tomorrow, which is going to be the key day for the week and, well, definitely for the next couple. Just having a quick look at the markets before we go over last night. It's worth just having a quick look at the correlations that we've got going on at the moment. So just going to make this T-note chart a bit bigger here. You can see we're just currently on the high of the day and continuing to push higher. You've also got gold. There you go, chart's just freezing a bit. We've got gold, which you probably see at the top right of the chart at the moment, just pushing to a new high as well. You've got the yen, which has just made a fresh 5-month high against the dollar, pushing on to the new high, while equity markets are also coming down. I'm just going to wait for the chart just to unfreeze here, but it's interesting to see these correlations coming back into play. I think what sort of sparked part of the downside that we saw over the last couple of weeks was definitely yields rising, so T-notes price falling, and you had the correlation where equities were also coming down, not just in the US but Europe as well. While this CQG looks to freeze, we'll just transition the screen to talk about the brief news stories that we have. I think one of the interesting things, or something to be aware of, how it may not be the most important headline, is Trump's $4.4 trillion budget boosts defense with more red ink. So it sounds pretty impressive. I wouldn't be taking too much notice on this. As you can see, as you go into a bit more detail, usually these things are pretty much dead on arrival. You can see down here where he's looking to put most of this. The proposed change in spending, putting more from 2017, 18% more into national nuclear security, admin, defense, homeland security, and then a lot out of transportation, state, small business. So this is the sort of change that Trump is looking for. Whether any of it actually really goes through is up for debate. So while it sounds pretty impressive, it's not going to be like, right, 4.4 trillion, stock market's going to go higher, Trump wins again. It's very much a case of it's dead on arrival, if you like. One other thing which caught my mind just on the way into work, and there was actually a chart from yesterday. You can see here, this is the S&P liquidity on the futures. The black line that you see down the bottom here, this is yesterday's liquidity, and the lines previous, the red ones and the sort of the darker orange, are the last 5 trading days. So we're starting to see a pickup in liquidity, which is definitely important going through. I think what has been quite interesting, definitely last week, was, if you just look at your trading ladders, even now, it's not the most that it's been. You're having quite a lot less orders on at each price. While volume might be high, the liquidity at each price between those big ranges is a lot smaller than it has been, say, 3-4 weeks ago. So it's definitely something to keep an eye on there. I think in terms of stability going forward, you'd like to see liquidity just pick up a bit, and then we can start perhaps saying, okay, well, the worst is over now. I was speaking to few people over the weekend about the liquidity, and some that aren't necessarily involved intraday trading, and they were just asking how they see equities, not just in the US but in general, how they see them going over the period. I think it's very much a case of everyone's sort of got that wait and see approach, and I was mentioning about liquidity in the markets being so low, and it's definitely a sign of worry, and not necessarily panic, but just the market being quite undecided. You were seeing, last couple of years, anytime you had a down move, technical point, good place to buy, let's push the market higher. What you're seeing now is those technical levels have been completely ignored to some extent, and we just keep on going through those. Just unfortunately, the CQG has decided to crash here. So in terms of actually going through any charts, it will have to be a case of doing that later. Actually, there you go, the CQG gods have listened, and we seem to be looking to come back shortly. But yeah, in terms of the liquidity, definitely something I'll be having a look at here. The the Twitter handle, this guy's quite good here. You can see Eric Scott and Seda post these liquidity charts throughout the day. I mean, obviously you can have a look at your own trading ladders, and we can have a look now just quickly at well, the S&P and the Dow. And before, like we were saying about 3-4 weeks ago, these orders on the ladder were quite a lot higher. I mean, Dow Jones, you're getting, look, 1, 2, 3, 4, 5 at each price. So still very thin. I would like, in terms of anyone looking for that, this continued upside that we saw maybe since Friday close, if that was to continue, I'd really want to see liquidity pick up. If we have a quick look over at the S&P chart on a weekly basis, so you can see just where we are now. So those two, obviously the big red candles you see the last couple of weeks, but the last time we had 3 down weeks, rectangled here, beginning, well, middle of sort of 2016, so quite a long time ago that we had 3. Any more than that, the last time we had 4 was, the back end, sort of middle of 2014. So, it's not a case of me saying that this is the top. I just wouldn't be expecting to make a decision on that right now. Tomorrow is obviously the US inflation data. Whether that comes in better or worse could signal a move higher or not. In terms of, if we look at it from an intraday perspective, yes, we've had a little move to the downside here on money flowing back into T-notes, yen and treasuries in that risk-off move. Technically, intraday it hasn't been amazing. Yesterday wasn't too bad. You had the low of the day, which acted as a good level of support. Friday evening on the close, you can see how good the low that we made at the beginning of the week acted as well. You can see pretty much to the tick, and in such a illiquid market at the moment, for the technical level to work that well was, for the bulls, was definitely quite encouraging. Wednesday, tomorrow is the big one. That does come in, surprisingly a lot better. Than I think we can start to see more downside. Then it's opening the door back to levels not seen for quite some time. To the upside, I was speaking with a few guys in house yesterday about what the key level from a technical perspective is, and here we've got the S&P going back. Well, we've got the second, so basically the month of February. If I just mark this up here, you've got the low of the 5th, really good level of support, and you had the break and the classic. Technical pattern's still working quite well. This is the big level to the upside. We had a go at it on the 7th, so one of the days last week. Any potential upside seems to have been stopped around there. If we do get a breakthrough there, not just from a technical perspective, but you've got to imagine to get back up there, sentiment has started to change, liquidity has probably picked up as well, and then next thing you know, people are talking about all-time highs again. In terms of Trump, and going back to that story that we're going through here, let me just transition again. For his budget boost, more to the defence and all this, it just gets me thinking about, what Donald Trump does want, and he's really got, we'll switch over to the Dow Jones, because he's really sort of targeted that as his prized possession. And I was going to mark up the similar level here for the Dow. He seems to pretty much always get what he wants eventually, some way or another, sort of swing it his way around. And because he's targeted the Dow, my longer term view, or the view for his sort of stint as president, is that the Dow Jones is going to continue to go higher. I feel that he's target that as his baby, if you like, and he will do whatever he can to boost that up. You saw him sort of, if we just put this on a longer time frame, when we did have this fall, I'm just going to remove the pivots to clear it up. He was saying, we've got such good news, and the market's going down. Before, when there was good news, the market used to go up. He was sort of crying a bit, but I feel, liquidity picks up this week, perhaps next week, and then we start to see a rise, especially if tomorrow's reading isn't that great. On the flip side, he could be judged the fact that the dollar has been so weak since last January. The dollar index has been battered really, and actually today it's still down 0.3%. So whether he's judged on the stock market or the dollar is up to the pundits, but he's very much happy to take the lead on the Dow Jones is his, and I feel, just based on what Donald Trump wants, he seems to get it. Let's not forget, he is the most powerful man in the world at the moment. Let's just have a quick look though at the Dow, which has been probably the most illiquid one of the Nasdaq, S&P, and Dow Jones. Sorry. Where could we go going today? Yet we just sort of had a little bounce off these lows, but I'm just going to circle up Friday evening's close. This was really interesting to see, and I think I got home on Friday around sort of just after 6 and watched. I was actually short S&P and Dow at the time on the breaks of these sort of lows, and well, I took it for a scratch. Actually, it came back. I thought we would get a test of the previous low from that Monday, and it was the buying was really strong going into that. So definitely encouraging in terms of where we go. I'm just going to reiterate again. Wednesday is the important one, and in 45 minutes we have the UK inflation data as well. But other than that, it's going to be quite a quiet day, and you find this a lot. It's like when there's central bank meetings or there's non-farm payrolls, the days leading up to it are relatively quite quiet. So I wouldn't be expecting too much today for a confirmed direction overall. Having a look at the currency markets on the dollar perspective ahead of that data tomorrow, am I really going to be expecting to see a big move upside or downside for the dollar? Probably not. So I'd be keeping it relatively tight. If here you've got 1, 2, 3, including today, 4 trading days for the euro dollar, and just look how range bound that's been. Yes, you're going to have a couple of moves where you can perhaps play that range, or if there is a news headline out or a technical break, charting pattern wise, but I wouldn't be looking to hold trades too long ahead of tomorrow. Just put the euro here on that longer chart. You can see, I'm just going to make this smaller so we can get a bit more in here. You can see from those 2018 highs, and it's very much the same for the pound as well. Just refresh that. We have seen a bit of resurgence in the dollar. Tomorrow can change that all, and then next thing you know, we're starting to look at a change of this correlation that we have seen for the last couple of weeks, and equities could go higher. You're getting the dollar weaken again, and next thing you know, euro and pound are back up at their 2018 highs, and the whole sentiment of the market changes. So it'll be quite interesting from that perspective tomorrow, and then any data that comes over the next few weeks. Also on the data calendar today, I'm just going to have a quick switch over just to show you. Obviously we've got the UK numbers out at 9:30. We'll have a quick run through that in a minute. Also, what will be quite interesting, 9:30 tonight, not necessarily from a trading perspective, but more build up for tomorrow. API is out at 9:30. Oil, there's a couple of headlines. If we do switch back to that oil chart, let me just transition back to the chart here. Let's have a look. Oil. Just going to put it on a daily just to show you. We finally had an update yesterday. 1, 2, 3 quite big down days in a row there for oil. Finally having a bit of an up move, but very, very miniature. You could perhaps say overnight we went a bit higher. OPEC signaled it expects demand for crude this year to exceed current levels despite the rising US output. And I think that's the main thing, that rising US output number that we saw last Wednesday. Looking at the chart here, there you go, you see the move. And, each pullback on the day was small, and then we get that continued move, and next thing you know, from starting that day at the highs of above 64, we're finished Friday at one point on $58. So a big move to the downside. Can that continue? Tonight 9:30, tomorrow 3:30 will definitely be interesting for that going forward. So it does seem that these markets are just in the balance whether they look to continue, and if we were to have a really strong number tomorrow, output was to increase for oil tomorrow when 3:30 as well, then you start getting that panic come back. The liquidity could thin out again, and you're seeing the end of the cycle almost. You've got bonds that have come down. Let's have a quick look at T-notes here on that week. It's one directional since, what's that here, we got 5th of September, but really if you want to go super long term, the middle of July, June 2016, they've started to continue this downtrend. Then you get equities, look, we're starting to come down. Commodities, if oil continues that, gold as well over the last few weeks has been coming down, albeit we are starting to just find a bit of support now. And then the market will start panicking again, and it's almost that end of the cycle feeling where the markets that have been going up for years are now starting to come down. Perhaps it's not the smartest move to say, well, all pins on tomorrow's data for that, but it could definitely have quite a big effect going forward. Just going to switch back to the data. You can see the readings there. So core for the year-on-year 2.6 expected. The CPI on its own 2.9. Here we got the readings for the inflation rate 3% last month. I mean, anything around there is not really going to change too much. It's been consistent over the last 1, 2, 3, 4, 5 months really, an average of 3%. The only outlier 2.9 and 3.1. So unless you saw, you know, really strong reading or maybe a 2.8, I wouldn't be expecting too much to take place. If we have a quick look over at the pound as well from an intraday perspective, it's not really, I would say, looking, you know, you do sometimes see before data almost a leak. I mean, you can't really make a judgment there. Yes, we're near the high of the day, but we've also been in this range from 6 to now where we are now, where we have gone down to the pivot a couple of times into the high. So I wouldn't be necessarily taking anything from that. Where we've got 40 minutes. Where can we get to a better reading? I think from a technical perspective, this yesterday high where it acted very well was also the low that we saw at the back end of the 8th. A bad reading which we haven't really necessarily seen for a while, and then suddenly yesterday's low in S1 comes into play and a breakthrough. That does open the door to the lowest levels that we saw last week, which on a longer time frame was actually the 16th of January. So for cable, definitely an interesting one. I think Euro Pound is one I keep an eye on. While correlations recently, I think, you know, I was speaking to a few people over the last few days about how the correlations aren't really working at the moment, especially with gold. And one correlation that has sort of half broken down with this equity sell-off has been with the pound and the FTSE. Off this, you know, 9:30 release, short-term move, yes, I would expect that correlation to sort of come back, stronger pound, weaker FTSE, or vice versa. But in terms of a longer move for the remainder of the day, I wouldn't, you know, trust that too much. Looking at the markets today, obviously, you know, as mentioned with pound, I think you know, better than expected number. We get a push through there, and the 139 handle, which offered good resistance. Bad number S1, S2, you know, doesn't seem a million miles away. Having a quick look over at the yen, as mentioned, here we'll go dollar yen. You can see we've continued that move, broken through Friday's low. I think, yeah, I mean, ideally on a day like today, you do want to be half patient. If you can get a pullback to that region, it would be, you know, fantastic. Technical place to go short. You can see this chart on a longer time frame here. I know I was speaking to Safe, or when was it? Well, definitely last week and the weeks before about, you know, why is the yen not catching a bid? And now it seems after all of that, it finally is. And breaking through. If you have a quick look on a weekly chart here, I'm just going to clear the pivots off just to clean it up. I'm sure all you yen traders or dollar yen traders are looking at this level here that we just almost found a bit of support on. Was also, and this is the futures chart here, that the 18th of July it was the high, and then fantastic trade where it offered support then back in September last year, and now we're coming to this point. Whether we can get a breakthrough today, I think it's important where we close. You know, you may get those sort of false breakouts from this level. If we can close below there, big level, and then next thing you know, 2016, end of 2016 levels start coming into play. So one to keep an eye on going forward. Let's have a quick look over at equities again in Europe. For this time, we saw DAX coming under a bit of pressure as money went into safer havens, if you like, but we have had a bit of a pullback, and now the middle of yesterday's low around here, 315, is just acting as a bit of resistance. The DAX up to its usual tricks, going higher, going lower as well. Equities in the US just finding a bit of support at the same time. Here you've got the Dow, S&P and NASDAQ very correlated at the moment. Wouldn't be expecting too much necessarily right now. The afternoon and tomorrow is going to be the main sort of events for that going forward. Have a quick look at the other markets that we haven't looked at just to wrap up. Aussie dollar, you can see here, let me just put this back on the 60-minute. From a technical perspective, you know, R1 yesterday was a good technical level to the downside. We didn't really get you know, the bigger move that perhaps I was expecting. R1 today, I mean, it could get quite messy if we start coming around here. It might be safer, and this again probably one that comes later in the week, the high that we saw on the 6th to sort of maybe perhaps continue. But you know, data tomorrow comes out weak. Next thing you know, these markets are pushing back to that 2018 highs as well. Any questions, guys? Please do get them in the chat. I'll be posting charts throughout the day as well. Of course, you've got just over half hour until the UK data coming. So at 9:30 there, so I wouldn't really be looking to get in on any cable trade, FTSE or Euro Pound. Where we are right now, you can see they're sort of between the pivot and the high of the day, pretty much bang in the middle. I would be preferring to either see like a really strong, you know, above that 3.1, sort of a 3.2% number, or a really weak, really 2.8, something we haven't seen for a while. Other than that, I'm not really going to expect to see too much, and it'll be a short-term reaction either way, unless it is one of those sort of numbers that do come outside of that bracket. But yeah, hope you all have a good trading day. Any questions, please do get them in the chat.